All right. Hello, everyone. My name is Scott Whitehead. For those of you who don't know me, I'm Chief Marketing Officer at Total Financial. Super excited that all of you are with us today. If you know anything about myself and Diana and Total, one of the things that we really pride ourselves on is finding really good strategic partners that can bring value to your practices. And that's what we're doing with this preferred arrangement and preferred agreement that we have with NIW. Um, I've done business with NIW for the last probably 18, almost 20 years, and Total has done just the same. And we just love our partnership with them. What this does, this preferred agreement that we have with them now takes us to the next level. And I just think that's one of the things that we at Total love to do. We want to reach out, we want to find the experts in different fields that can bring value to you, value to your practice. And with NIW, we get years and years and years of incredible experience on the financing side. We get access to the KaiZen product and process. And now with iLia, it is an amazing set of tools. We have such a great setup with our underwriting and what Diana and her team does. You match that with the tools of KaiZen and iLia, which with Travis is going to show you today, and you're going to be able to get to more clients. You're going to be able to prospect more, get to the more affluent style clients, and really increase your production. So really what we're going to do today is we're going to focus on myself and Travis. Travis is our regional VP over at NIW. We're going to focus on what KaiZen is, how it works, some of the target markets that you can go after. And then Travis is really going to spend some time inside of iLia. And iLia blows me away. One thing that we love at Total Financial is technology, right? We just redid our website. We added a new quote engine. We added a new tool on the underwriting side with Digital Owl. We love to bring new technology to the forefront. And iLia is an absolutely mind-blowing experience when you see it, because it'll help you prospect, close business. It'll help you do everything all in one place. So what we're going to do, we'll hit KaiZen, we'll hit iLia, we'll talk to you about how to get access to it at the end. If you are not muted, could you mute yourself, please? That would be extremely helpful. So with that, I want to start with a few things. So every day I'm on the phone with agents and I'm chatting with people all the time. And these are some of the common questions that I get on a day-to-day basis. Number one, do you have leads, right? That's probably the most common question that I get. Number two, do you have a marketing system that we can plug into to drive more leads? On the financing side, does premium financing work? And I'm just going to raise my hand right now and I'm going to tell you it does. I've seen it. I've done financing for almost 20 years. And if you do it properly with a great partner, it does work. But the follow-up question is why is premium financing so difficult? And it can be. It is a complex transaction. And what we're going to show you today is a financing system that works and it's relatively easy to do. So we've taken, and NIW has taken out a lot of the steps and really consolidated and made it easier to do. And then, that's that final question, is there a better way? So these are what we plan on answering today. A few things, there is a chat button. Feel free to chat and ask questions. I'll give those to Travis as we go. At the end, we'll open it up. We'll do some more questions, but this is your webinar to learn how KaiZen and iLia works and how our partnership works. So feel free, choose to chat. We can answer those for you. So with that, I am going to turn the presentation over to Travis Fertini. He's our partner over at NIW, and he's gonna jump in and kind of talk a little bit about themselves and how this whole process works. Travis.
Thank you so much, Scott. Let me get my screen shared here. Give me a thumbs up if you see that.
Perfect.
Okay, perfect. All right. Well, thank you so much, Scott. Thank you for the partnership. Like Scott said, Diana and Scott, the Total Financial team, have been a partner of NIW for years now, from one of our original partners. So we're really excited that they've jumped on board with us on the preferred side to get all of these additional benefits that we've ultimately provided for a lot of a handful of IMOs in the country. Now, why I say a handful, there's not a lot of IMOs that have access to this. It's fairly limited distribution. So that's an exciting reason to be a part of Total Financial and this preferred partnership that have really committed to partnering up with NIW with their financing endeavors. So thank you so much, Total, and the advisors that are on the call today. Just briefly, a little history. We're not new in the business. I've been financing now. It's all going on 22 years. Now just hit the $6 billion mark on total financing with our carrier partners and lenders across the country. And KaiZen specifically, this version of financing has now been around for about 9 years, and we just hit the $1 billion mark from a lending perspective with KaiZen. So a lot of history in regards to this business and a lot of history doing business with Total Financial. So that's a little history of who we are as a financing firm and the years that we've been in business. We saw a really big opportunity to go from traditional premium financing, which, by the way, is still a big part of who we are as a firm, to helping a more affluent market that's not so much a really high net worth client who we feel very comfortable with, and we still work with those clients on a regular basis. But we saw a huge need for the affluent markets, the individuals that are high income earners, but they haven't hit that high net worth yet. So just to let you know, we don't do just KaiZen business. We work with the estate planning type cases. Clients typically in that $10 to $20 million range is the traditional premium financing that you can use with us and of course Total. But again, this huge opportunity on the business and individual supplementary income side of the business is what we're going to focus on today, which is the KaiZen market. So let's talk about that and why you should see really how big of an opportunity this is, and also kind of why you should care, right? I mean, if you're going to get on a webinar and spend an hour with somebody, you want to know that it's going to be worth your time and something that you want to implement into your practice. The first reason, though, I think you should care and why it's a big opportunity is because it really does help a lot of clients deal with their supplemental retirement issues, or their lack of being able to save enough for those things in the future. So the biggest issue is that you can provide tremendous value to your clients with this life insurance strategy. But secondly, from a finance or KaiZen perspective, this is the only premium finance strategy in the industry that your client doesn't have a direct relationship with the bank. I want to let that soak in just for a second. You're getting your clients or providing your clients with access to leverage without them having a direct relationship with the lender. There's not a single financing program in the industry today that can claim that. Right? So there are no loan documents, no personal guarantees, no credit checks, and no financial underwriting for the loan. So that's what we mean, what Scott meant by making this easier, bringing some simplicity to what is a complex strategy. NIW has done its best to remove those complexities of traditional premium financing, of giving your clients access to leverage without the traditional worries, risks, or complexities of borrowing money directly from a bank. So we thought about that. How different of an idea is that in regards to giving clients access to leverage, right? We as a finance firm can look very similar to everyone else. Now, you as a financial advisor might find yourself in the same situation. How do I differentiate myself in the solutions I provide compared to the advisor or the insurance agent down the street? We're going through the same process with you in regards to wanting to differentiate ourselves from an industry perspective, bringing a very different value add to the customer. And we know we're doing something right because time after time we get, this is one of the few things I'm talking about to my clients that's grabbing their attention. right? So whether you sell Kaizen or not, and I will be the first one to say, I hope you do, the conversation allows you to get a first, second, and third appointment. Now, you might sell that max funded IUL instead of Kaizen, and that's okay. That happens sometimes, but it is something that people want to learn more about. And sometimes that's all we're trying to do, especially as we're prospecting. And as salespeople, we are looking for something that people really want and need clearly. We don't want to dip our toes into a totally saturated market. Kaizen is not. It's a completely, in my opinion, untapped market. And there's very little competition in this space in regards to this kind of loan and use of leverage. So you do have something different to grab the attention on top of providing something that clients really need and really want. Now, why are we focusing on Kaizen? And it's not that we're focusing more on it, but why we think that there's a big opportunity here. Well, on the traditional premium financing side, the average client has to have about a $10 million net worth or more to even qualify, right? Now that's a pretty small market. It's a niche market. And not all of us have those kinds of clients. So 1.4 million households in the industry really even qualify. And you can only imagine every single advisor in the world wants to work with those 1.4 million, right? Everyone's calling that client. It's a tough market to actually market to as well. You either have to know somebody or already kind of be in that market. We're focusing on Kaizen because what Kaizen does, instead of create benefits for estate planning or solve estate planning issues, Kaizen bridges the gap between what people can save and what they should be saving. So Kaizen's focus is not so much big death benefits for estate planning techniques. Kaizen is more about supplemental income, supplemental distributions, max funding life insurance for the purposes of that tax deferred growth and that tax-free distribution. That's Kaizen's focus. And when you think about what's two of the primary fears or concerns that clients have, which are maintaining a quality of life in retirement, as well as having money for medical emergencies, maybe in the future, Kaizen fits that person perfect. It covers and addresses these two specific things, which is again why we focus on it. Now, what does this mean to you and in regards to how many people you can talk to, how many people qualify, and financially, what does it mean to you from a target premium perspective? Well, there's about 122 million households in the United States that earn an income, right? Now, about 10.3% of those households earn an income of $200,000 or more. So it's a much broader opportunity than a traditional premium finance sale. 12.6 million households earn over $200,000 a year, which is interesting because all the statistics tell us, 401k data, IRS data, tells us that most people are chronically under saving. And we can probably admit that we might either know someone or kind of find ourselves in that situation, which means that about 11 million households need not only your solution, but they need access to leverage to get to their goals. So that's a much broader opportunity from a marketing perspective. Now, from a target premium or premium perspective, what's this opportunity look like? Well, the average Kaizen case is about $71,000 of annual premium total. Now, remember, and you're going to learn about this, the client's not paying that total premium, but that is the total annual premium on the case, average. Target premium, about $18,000 to $19,000 is what that average target premium is for the average case. You multiply that target by 11 million households, that's a big number, right? $200 billion in target premium. Now, we don't claim that we're going to capture all that market, but if we got 1% or attached ourselves just to that 1% of the market, it's still a $2 billion target opportunity, $8 billion of total premium. So this is worth at least glancing at and seeing if it fits some of your target market. It's again, right for the picking, and a lot of people need the help that Kaizen ultimately provides. Now, who are you looking for? What's the client profile? The client profile is 18 to 65. Most of our clients fall between 35 and about 55 years old. That's the kind of the I would say, the sweet spot for KaiZen. You're looking for households that are earning about $200,000 or more a year. Some carriers don't require any net worth for this program. So you're really looking at the client's household income for qualification purposes. Good health, it's life insurance. We need to be a standard or better. And you need someone that can commit to 5 annual contribution payments. So we're looking for savers, but we are looking for ones that aren't saving enough. So you're looking for somewhat of a commitment for about 5 years, and an average death benefit need of about $1 million or more. That's kind of the general qualifications that you're looking for. Now, we don't have any maximums in the amount of premiums or death benefit that can go in, but we do have some minimums. I will tell you, our minimum premiums are going to fall between $20,000 and about $22,000 a year on the client side. So for the right client, it can be a very, very affordable and doable plan for them. Now, who are you looking for? Who's the target market that's buying KaiZen? You got your highly skilled people starting late in life, people max funding their 401ks, people that are in already high tax brackets, worried about where they're going in the future. About 30% of our clients are physicians, doctors, people that are saving that later in life. Why? Doctors are just paying off student debt in their 30s and early 40s. They've lost years of compound interest. These are the clients that need the leverage more than anybody. Most of us, though, that are in our 30s and 40s are just making the dollar amounts where we can start saving more. So it really is applicable to anyone, a business owner, people in financial services. Believe it or not, a lot of our customers are in the financial services arena, tech, engineers. Again, anyone with a household income of about $200,000 a year is a qualified customer. And what KaiZen addresses are probably 3 of the major risks that life insurance addresses, right? But one that you may not really think about too often. Obviously, KaiZen and IUL addresses market risk. It gives us the ability to mitigate or reduce general market risk because of that index universal life chassis that we're using. Tax risk. If you guys are selling max funded life insurance right now, you know that tax-free growth and tax-free distributions is an important part of our client's portfolio. KaiZen clearly addresses that because that's how we're using the life insurance chassis. But the one that's probably the big missing piece to a lot of our clients' plans is capital risk, right? How many of us are talking to clients, they want to save more, they just can't, right? They can't save enough to reach their goals. That's the one thing that KaiZen really does bring to this equation is that you can get your clients closer to their goals with less of their own money out of pocket, utilizing smart leverage to get them there. So that is the big selling point. And why do these clients need it? Because Americans are the worst savers in the world. As a matter of fact, we save less than 5% of our annual income for savings. So it's a big problem. That capital risk is a problem. And if you really think about it, I did this research recently to figure out where we need to be as a society in regards to saving for retirement and how much we should have set aside at various ages. Well, I'm 45, and I said, gosh, how many of my peers, and this report, by the way, that I found, it basically says that we need to have about 2.5 to 4 times our annual income and savings at these various ages in our lives. Now, I know my peer friends, if anyone's making $250,000 a year, which is about the KaiZen type customer, they're supposed to have about 2.5 to 4 times their salary, which would be about $600 to $1 million in savings at 45 years old. Now, how many of us know that of that demographic that is saving at that level? And my gosh, when you're 65, it says that we need to have 7.5 to 14 times our annual salary at that point in savings to retire comfortably during our retirement years. That's a big number. And again, most of our clients can't get there. So what KaiZen's doing is helping us get to our nest egg without completely draining our current lifestyle. That's what our clients are concerned with. And then you have the national debt chipping away at what our clients are thinking is going to be a good qualified plan or 401k that they've saved. At a $30 trillion debt, guys, most of our clients don't even recognize that 57% is the average tax rate. So our clients are up against a lot of things: taxes, market risk. They're up against capital risk of not being able to save enough. They are a problem. So this is why Kaizen is becoming such a popular conversation, because they've got a serious retirement gap that they've got to fill. And it's not going to come from the government, and it's probably not coming from their employer outside of a 401k match. So the first 10 or 15 minutes of this got you thinking. I hope it did, because every one of our clients, most of our clients in this demographic are facing every one of those risks. So how does Kaizen fit into all this, right? Well, more money going into an IUL, more money working for your client inside that IUL generates more distribution and creates more death benefit that they need. And for a high income earner, in many cases, unlimited contributions is going to be very important. They're limited to certain qualified plans and qualified retirement plans. With life insurance, there's no limitations on premiums outside of qualification. So we've seen people putting in somewhere in the ballpark of $21,000 a year, all the way up to $500,000 or $600,000 a year. So the sky's the limit on the upside of the Kaizen program. It doesn't change anything from the financing side of the program. So this really applies to a large array of clients. And that leverage, how much leverage does a client get? Well, for every $1 going into the Kaizen plan, a lender will add an additional 3. So that 3-to-1 leverage increases our clients' potential distribution, and many times 60 to 100% more than if they were to do it completely on their own without leverage at all. And we're getting access to this leverage for up to about 15 years at a 1-year borrowing rate plus about a 175 spread. So we've got a very, very good loan competitive borrowing rate because of how we borrow. And we're going to get into that in a minute, but those are some of the terms that you can count on when utilizing the Kaizen program. Now, fundamentally, how does it work on paper here? This is an example of a 45-year-old client male putting in, it's a $1 million death benefit, by the way, putting in about $34,000 a year for 5 years. Now the bank matches that with about $35,000 in the first 5 years. And then the bank fully funds your 6 through 10. So you're getting about $516,000 from the bank, and your client's participating in, on this example, about $172,000. And the way that it's structured is no different than how you're probably structuring your max funded IUL now with Total Financial. Your max funding, we are max funding these right up to the MEC limit. So we do an option B, we blend a little bit of term in there to keep the costs down, and we fund that for 10 solid years. After that 10th policy year, we let the policy grow for an additional 5 years. And then that's approximately when we do a policy loan against the life insurance, pay the lender back, and then the client can start taking tax-free distributions as soon as that loan is paid back, or in our example, age 65, where they can take $65,000 a year out at 65 to 90. So structurally speaking, this is probably not uncommon in regards to, or unusual in regards to how you structure max funded life insurance, but we do this by minimizing all the costs possible, allowing that policy to be extremely efficient. We do all of the material changes, B to A switches. We do everything to maintain the low cost structure of the life insurance to be able to pay that lender back in approximately that 15th year. It's a very important part of our design and strategy. So if you were to take that same $34,000 and put it into an after-tax investment, utilizing the illustrated rate of the carrier versus a self-funded 5-pay, that's probably something you're selling today, versus a Kaizen plan, you can see that we're going from almost a $36,000 potential distribution to, with Kaizen, $65,000 of distributions, while almost tripling the death benefit at age 90. So you're giving your client additional distributions as well as life insurance and possibly living benefits, depending on the carrier that you use. We also at NIW pride ourselves on stress testing. Now, this is a webinar in itself, but what I want to tell you is that our lenders and the carriers wanted to make sure that, because remember I told you there's no loan, there's no relationship with the bank, and I'll get into specifics in a minute. The lender wanted to make sure that the policy could pay back the lender, regardless of the economic, various economic scenarios. Well, the two worst ones we could think of from a financing perspective would be the high interest rate environment of the 80s and the Great Depression of the 1930s. Now, in a high interest rate environment of the 1980s, what we did is we took our ledger and benchmarked it against a borrowing rate of 1980 to 1999. And in that time period of borrowing, we could still pay back the loan plus interest, the client not pay a dime more in premium, and get about $49,000 of distribution out versus 65. But it still worked, and it was still a great use of leverage. Now, what about the Great Depression? That would be what that benchmark was, is 9 zeros in a 15-year period between 1930 and 1945. And even during that period of time, we could still pay back the loan plus interest, client not pay a dime in additional premium, wait till 65 and get $42,000 of distribution out at 65. Still better than a self-funded plan. So the plan is very robust, even under conditions like the high interest rate environment of the 80s or the Great Depression. So a lot of due diligence there so that you can feel safe and confident in presenting this to your clients. Now, I'm going to go over the ledger a little bit so you understand the numbers. A lot of us on the webinar today are numbers people. We want to see how it works. This happens to be an Allianz Life Pro Advantage product. And so we're going to go over these particular columns so that you understand how this all works. Just an FYI, small just disclaimer, we utilize what's called the early liquidity option with the carrier. It's basically a waiver of surrender charges. So it allows the policy to have a lot of liquidity inside the contract. Now, there's a reason for that, and I'll get into it in a minute. But this first column basically shows the interest rate that we are projecting out over the next 15 years. So that's the 1-year rate plus spread, and that's a forward curve that we get from our carrier partners that they want to see in regards to forward rates of rates. The next column is basically the 10-pay guideline annual premium. And then the next column is those 5 premiums we discussed. Those are your client's premiums plus a trust fee that we'll talk about in a couple slides. And then the next column, C, is the premiums that the lender is putting into the plan. Now, I said a word that was a little different there. It's not a loan that your client's getting. It's a loan that the bank, it's a premium that the bank is providing the policy. So really think about that for a minute in the words that we use, because the lender is placing money inside the contract on your client's behalf. Your client's not borrowing it directly. It's just a key term to make sure that you utilize. And then column D is the loan that gets retired. There's a loan that gets taken out with Allianz, where you pay that loan back to the bank, and now that lender is completely out of the picture. So that happens in approximately that 15th year. Now, the next column is loan plus interest. That's accruing outside of the contract, and that would be what would need to be paid back if there was a death, if there was a walk away at any point, or a surrender. Obviously, we're hoping to get out to year 15 so that we can pay that lender back and utilize that life insurance policy. Now, here's where I want you to focus on in regards to column F and G. The cash accumulation and cash surrender value are identical, $60,282. Why? Early liquidity, or the ELO rider. That's a waiver of surrender. So what you have here is, think about this. Your client's putting in $34,000. The lender's putting in 35 and you have about a $37,000 loan plus interest in year one. There is $60,000 of cash surrender value available in this contract. We design it with enough cash value and loan to client premium ratio that the cash values of this plan can always cover the bank and interest loan in any given year. So the banks have allowed us to utilize the life insurance as the sole and only collateral for this loan. Again, the client's not on the loan. They have no relationship with the bank. And part of that is because the life insurance holds all the responsibility of paying that lender back. Now, if the client walked away in year one or any of these years that you see in column H, that would be the surrender value the client would receive after paying the lender back. Now, why we can get out to year 6 and the bank goes, hey, we'll pay the rest of the premium, because there's so much cash value here in year 6 that they feel comfortable lending the full guideline annual premium years 6 through 10. We have covered the loan obligation with the 25% out of pocket that the client is paying in the first 5 years. So that's what's going on structurally from a design perspective. Now, there's always enough death benefit to cover that loan balance if anything ever happened, God forbid, for our clients. But and then what we do is a face reduction to lower those costs of insurance around year 10. We'd make some material changes. We hope to loan exit in year 15, so your client at that point can start taking distributions as early as loan exit, or in this particular example, age 65. That's it from a ledger perspective. Not real complicated. We do all of the servicing, material changes, loan exits as a servicing partner for you. Another aspect that Scott talked about simplifying the process. We are your servicing partner through this entire process. And you have us all the way until that lender gets paid back. So that's, again, our commitment to you as a servicing provider. Now, again,
hey, Travis.
Yes, sir.
Can you walk back to the collateral piece one more time and just explain again the client's ability not to pay collateral there? So can you just recover that quickly?
Well,
collateral. Just cover the collateral calculation again.
Okay, so the reason why there is no need for outside collateral, right? I think that's what you're asking for, Scott.
Yep.
It's because the client is paying half of the premium in the first year, and then the bank is paying the other half. That ELO rider waives the surrender penalties, allowing the cash values to be high enough to cover the bank loan plus interest in any given year. So we're funding this with enough client premium as well as bank premium to cover that loan throughout the entire lifetime of the plan up to year 15. So if you see here, there's $60,000 of walkaway cash value, right, Scott? There's only a $37,000 loan. So the bank feels very comfortable considering the fact that there's $60,000 to cover that obligation, that they're only going to utilize the life insurance as the collateral assignment. No outside personal guarantees or attachments to this loan outside of the life insurance itself. Does that cover it?
And then I have one other question. The projected ROR is covered, I believe is what Robert was saying here.
Right. Well, I mean, these are ran at the illustrated rates at the carrier level. This is 6.6%. That's Allianz's current illustrated rates. Obviously, those the stress tests will obviously challenge that rate in regards to the conservative side of things. But yes, this is assuming a 6.6 with Allianz right now, and a forward projection of interest rates on the loan at around 4%.
Perfect. Thank you.
Yep, no problem. Now, how do we achieve this growth? Well, part of that achieving the growth is that we are minimizing the costs, maximizing the policy day one, blending some term insurance in there to make sure that we've cut all the fat off of the cost. We fund it for 10 years. That's a very important part of any IUL design. And then we hold and wait for 15 years. So there's a lot behind why this works in regards to the internal rate of return that we are getting on these policies. Now, remember, I said no loan documents, personal guarantees, credit checks, financial underwriting. The one piece that's missing here is you go, well, how's that possible? Well, this is possible by the trust arrangement that we have at NIW. NIW sets up 8 master trusts every single year as the borrowing trust on the behalf of the client. So what happens every 6 weeks is we set up a master borrowing trust, and all of the KaiZen and hundreds of KaiZen customers every 6 weeks are bundled up, and we tranche business by the millions. So we are borrowing $5, $6, $7 million every 6 weeks on the behalf of hundreds of clients. And the reason why the lender is willing to do that is because that master trust holds the life insurance and a first collateral assignment, death benefit, cash values while it's being lent to. So the master trust is purely there as the borrower of the money and holds that life insurance and a first collateral assignment until the lender gets paid back. That protects the bank while it's lending the money. It also protects your client from having a direct recourse relationship with the lender. And so this structure is really the key to keeping the bank and the client completely separate from utilizing this leverage. So again, very, very unique on the trust side. And this really does make KaiZen a completely different finance program than anything else on the street today because of that master borrowing trust. Now I'm going to wrap up here and get into iLia in a second, but what I also want to briefly tell you is NIW is a servicing partner with you for the entire 15-year loan facility. This happens to be a snapshot of Grace Bernard's policy. She was the first one in the tranche close to 9 years ago. You can see that she's earned over 8.3% in her policy. She's had an average loan rate of about 325. She's earned over 5% on somebody else's money. So this is the kind of servicing that we provide for you and your client every year till loan exit, making sure that we're keeping this on track and that your clients' expectations are met. We work with a handful of companies, 2 in particular, National Life Group and Allianz are 2 of the core carriers that we work with from a carrier perspective for different reasons. I'm going to defer you to the total team to talk about the nuances and maybe why you would use one over the other. We're pretty product neutral at NIW clearly, but Total Financial will help guide you to the carrier that your client will either qualify for and or underwrite with when you go ahead and start applying for this plan. Now, I want to transition over. Keep your seatbelts on. We're going to keep going here. Usually you'll get a webinar where it's, hey, this great product, great carrier, and you're on your own, figure it out. Well, that's not what's going to happen on this webinar. What you just heard was an opportunity to have one of the most powerful tools to help your clients achieve their goals. And that product is KaiZen, and on its own merit is pretty cool. But what do you do to market it? What do you do to sell it? How do you present it? What tools do you have to enroll a client? Well, that's what iLia is. It's the interactive learning information assistant. It will give you the ability to invite clients digitally to educate themselves on the program. It's a tracking system in regards to the status of where your client's at from a sales and enrollment perspective. It's got a fully digital enrollment process built in with all the applications and trust documents all inside this system. We've provided social media, testimonials, fireside chats, podcasts, videos, everything that you need from a content perspective to get the word out. And as Scott says, only preferred IMOs have access to this tool. A lot of IMOs have KaiZen, not everyone has iLia. So I'm going to bring iLia up. And Scott, can you just say, yes, I can see iLia, or do I need to reshare? Probably need to reshare. Let's see. Here we go.
You need to reshare. There we go.
They're good. Okay, cool. So this is the interactive learning information assistant. Now, when you sign up with Total and you get the selling agreement, Scott, we'll talk about that. You'll get access to this system where you'll get invited to create a username and password to log into what's called an agent portal. Now, this agent portal is going to give you access to all sorts of content, right? Everything from, and by the way, we're allowing you to co-brand this system. So when you go in here and you set up your account, you can put in your photo, your logo. So when any communication or marketing you do through the site goes out to a customer, your mug is there, your logo is there, so that it helps familiarize the client that this is something coming from you. The system allows you to invite your client to view this educational site. Instead of sending them an illustration or a brochure, or we might say the old way of marketing to our clients, this allows you to send them a digital email where they get to log into a private, secure website to learn and educate themselves on the system. It's as simple as entering in general information about the client, name, date of birth, things that you probably already know about your client, and then hitting the send button. This system has Allianz inside of it, as well as National Life Group. But the one nuance to this, and it's kind of a cool one, is that all Kaizen business is done in the state of Nevada. So as long as you have a non-resident license in the state of Nevada, you can sell to anywhere you want in the United States. So if you're in California, you can sell to your client in Utah. All you need is a non-resident in the state of Nevada. So that's great also for clients that actually have, or agents have clients in the state of New York. Because in New York, you're allowed to sell Kaizen on a Nevada app with National Life Group, specifically with a non-resident license in Nevada. So a lot of benefits there, especially in this digital marketing age where you might be selling to clients in different states. So you send that invitation out to your client logs on, and they experience the client side of the education. Now, I'm going to go there in a minute, but I do want to focus on what you have inside of the portal to start activating your ability to invite clients and utilizing some of that marketing. Like I said, the invitation's pretty simple, general information, and hit send. So as soon as you get off this call today, start thinking about that client between 35 and 55. Instead of sending them an illustration and it's doing a full presentation, you can literally hop on this site, invite them, call them up, tell them that they're expecting something. And we can talk to you about the language to get them excited and the system, but you can start filling up your pipeline as soon as you get access to this site. And it's as simple as this create invitation module. Now, inside of the client management system, you're able to track your client's behavior. You're able to see whether the invite was delivered. You get to see if the invite was opened, or if they created an account. If they did, that means they're in the site. You'll be emailed and notified when the client starts enrollment, finishes enrollment. Every part of the pre-sale and sale process, you are informed of the entire way via email or inside of iLia via these little action items. So you're notified on every aspect of your sales process. So there's no guessing where your client is, whether it's pre-sale or once they've enrolled going through underwriting with Total. That entire process is found right here in the system. Let me show you let me give you a glance. When you click on the client's name, you can see all of the enrollment details, and statuses of what's going on whether it's complete or incomplete throughout the entire process. So very, very intuitive. It's kind of like a Kaizen CRM that you can utilize to follow and track your business. Now, we also have this chock filled of training. This won't be your only training you get with us and with Total, but inside the system,
consumers
all of our
quick and easy application.
Something happened here. I got a video playing for some reason. Okay, right. Let me close this. These are all of the different modules that you can click on that cover servicing, enrollment, marketing, agent links and lead management, prospecting, client invitations, how to navigate the site. We are constantly adding more and more training to the site as the system kind of evolves. So it's all built in here. From a marketing perspective, we are really doing our best to be content providers for you. Now, we're not going to set up your LinkedIn account. We're not going to, go down the social media route with all of you, because you all have your own style and how you prospect. But what NIW does want to do is give you relevant, thoughtful content to get out and get the message out to your prospects. So you can see here, the next best thing, it's basically a 2.5 minute quick video to get someone interested. We've got a 60-second one that kind of just hits someone really quick. Contact me for more information. We have a video on recruit and retain for small business and medium-sized business owners for use of executive benefits. We have one specifically addressing individuals. We have one on how KaiZen can be looked at like maybe a mortgage, or the mortgage analogy of utilizing leverage. So as you can see, we're constantly adding consumer content so that you can utilize it in your marketing. We just added these NIW podcasts. We're addressing real issues that are confronting our clients in regards to how are rising interest rates going to affect this program, of the myths that need to be dispelled about life insurance. Why do banks fund these plans? So we've got the owners doing podcasts that address real issues that you're going to have while you're out in the field selling. We do all of our Friday webinars. NIW has been doing a Friday webinar for 9 years, every single Friday. Scott can attest to this. We post all of those on the following Monday so that you have access to all of our trainings and Friday webinars. We have an array of client testimonials that can be used, but more importantly, we hope that when you get to a place where you sell a KaiZen, NIW will help you interview with your client, record a testimonial, and give you that testimonial for your own marketing. So we'll work with you to get access to our marketing team to record that testimonial with your clients, and you can use it in your marketing efforts. So we've seen a big uptick on the success of client testimonials and a lot of our agents' marketing efforts, because people like to hear from other customers, and it's working tremendously. If you're doing anything in the social media side of your business and you just don't know what to post, don't worry. You've got endless amounts of posts that you can use, take from us, and repurpose on your website. Well, I am talking hundreds of various topics, testimonials. Take our post, copy and paste the copy we use, and put it out there in your social presence. So please utilize any of our social media content that seems fit for your customer. And then what we did is create something called an agent link. Now, I'm only going to spend a few minutes here because I need to get into the site in a minute. These links are created specifically to your account that you can use at the bottom of an email, on your website, in LinkedIn, on Facebook, that will tie the client directly to your iLia account. So this link opens up a landing page with your picture, your logo, and it explains KaiZen in about a one-page kind of screen. It will then qualify the customer with an age, name, and email address. If they're willing to go that far, we'll show them the estimation of benefits, and that lead will come into your lead management for you to follow up on. It will provide you with their name, email address, their household income, phone number, and that will give you the ability to invite your client directly to iLia or call them for a first appointment. So we've created a lot of stuff inside there to help you market and get the word out. Now I'm going to close here with the actual system. Now, when you get access to this, you click on client presentation and you choose a carrier preference. This logs you into what is the client portal. This is the site that the client actually logs into to experience KaiZen and iLia. So we're giving you access to this so that you can show it to your client prior to an invite. A lot of agents are using this as their presentation tool to show the client the initial 3-minute video. It allows you to go in and do the estimation of benefits. Scott got real excited about this. instead of the traditional 30-page illustration, what we provided is an estimator so that you can have dialogue with the client about the benefits without showing them big old illustrations that in many cases confuse them. So for instance, if you have a 45-year-old client, let's say female and excellent health, and she wants to put in $35,000 a year, when you hit calculate, this is going to take numbers. I think I used Allianz directly from an Allianz Life Pro Plus array of illustrations. And within a few percentage points, we're going to get an estimation of benefits. So the first tab covers what my leverage is versus my premiums, but more exciting, my benefits. In this particular example, 35,000 for 5 years buys about a $1.2 million death benefit, $71,000 of distribution, and it shows the total distribution and death benefit at age 90. How awesome is that to show a client right then and there what their benefits are without having to run a full illustration? If they want to see $50,000, you would calculate again, and boom, you instantly have a dynamic benefit calculator for the KaiZen program. Now, from there, you got everything that you to educate the client on the obstacles that they're facing versus the solution that KaiZen brings. There's another video on how the whole program works. There's a deep dive into IUL. It's kind of an IUL 101 course, all visual, all animated. It talks about how the leverage works and the client's benefit over the next 15 years. There's a whole area on how we minimize risk through stress testing. It's just an educational piece that allows the system to do more of the talking than us. And it's working brilliantly because it's providing a lot of information that maybe you may not know right away, but it gets you into the market quicker. Now, I'm going to go ahead and go a little quicker down to FAQs and then turn this over to Scott. This system is chocked full of FAQs for you and the customer. So when you get access to this, hang out here. It will provide a tremendous value to understanding why the program was created and why you can have confidence in it. Then at the bottom, if this was a client portal, they would have this enrollment button that would literally launch a questionnaire, prep them for the application, and it will help them pre-fill the entire application and trust online. I'm not going to get into the details of that. It's probably a separate webinar, but everything from marketing, pre-sale, education, sale, and enrollment is found inside of iLia. And I don't even want to give it away. I think we should wait, Scott, for the next webinar. There, in the next 6 months, there's going to be another big overhaul and upgrade to the estimator, the enrollment process with one of our carriers. So stay tuned. This is an evolving opportunity. It's growing by leaps and bounds. And we're really, really excited, Scott, to have Total Financial on board with this opportunity. So that was a fire hose. I'm going to turn it over to you, Scott. I'm going to stop sharing and
Absolutely
share your last slides. But thank you all for being on this webinar today. I am going at this for 4 years. I smile and get excited every time, which is great when you have to do this full time. This is an incredible opportunity that you have with Total Financial. So thank you guys for bringing me on today.
Oh, Travis, this was a fantastic overview of the tools. And, one of the things that I started with was, prospecting, product, and process. That's kind of how I teed this up. And you just literally walked through how you can easily prospect with this tool, get to more affluent clients, brought in the KaiZen product. And it's funny because we talked about life insurance, but we really didn't. And then the processing on the back end, you combine what you have on that enrollment button and the e-submission tools to that, to what, like I said earlier, what Diana and her team does. And it's such a winning combination, right? So all of these different things. Do we have leads? Do you have a marketing system? Does premium finance work? Why is it so difficult? Is there a better way? We literally just answered that in the last 50 minutes with this tool. So the question is how do we get access to this? And it is it is a very, very small group of people that have this in the industry. It's a very tight knit group, and the nice thing about it is everyone doesn't have it. So when you're marketing and using it, it's great because it isn't everybody's thing. So you need to sign the preferred agreement, and if you want to have access to that preferred agreement, you can send myself an email. It's swhitehead@totalfinancial.com, or you can obviously call me at 310-477-7500. You can chat with your SVP, so Fredo or Peter, Seth, Mark, and Deborah. They all know about this. They've been working hard at learning it and understanding how it works, so you can chat with them. But is the minute that you do that, Ken Fong will send you an email with detailed instructions on filling out the NDA and all the process that you need to sign this up. And it takes once we get going, it probably takes about 48 hours to 72 hours to get you completely set up. And one of the things we do ask, and we will need to have either your Allianz or your National Life Group contract to do this with. It's preferable to have both. So when we're doing underwriting, we have the access to both. Also need your Nevada non-residence license. So I truly, truly believe that this is a one-of-a-kind system that can drive more opportunities to your practice. They've put marketing together on it. They have put great thought behind the actual financing design, and it doesn't even feel like financing. And now the processing piece is above and beyond. So I know I did have one question.
Scott, you made a really good point there. I'm going to just tagline on what you said. It doesn't feel like financing, and we don't even like to call KaiZen premium financing traditionally the way the industry thinks about it. Right? It's access to leverage, because your client's not personally financing anything. So it is a really good opportunity to even change some of our language, like you said, Scott, because we're not, the traditional side has its own, people have their own ideas of it. This really does change the conversation. So that was a really good point.
Yeah, it does. So we've got two really good questions, and feel free,
Sure.
to chat in some more questions. Robert, you asked about Allianz versus National Life. We're product agnostic here. I will tell you, if everyone knows me, I come from an Allianz background. I love the engine inside of Allianz. I truly believe that their capture of market is world class. National Life Group has their suite of living benefits. So depending on the client and the type of client that you like and what you're looking for, they're great carriers, both of them. So that is something, Robert, you can pick up the phone, you can call me and we can chat more. But I have a really long question for you. And I think this is a very relevant question. So somebody's asking, what are the hidden fees to the insureds? And I'm since this is the policies are in a master trust, if and when you refinance these policies, does the insured have any benefit in any way? You might want to pull this chat one up so you can see Travis, because there's a lot of great questions.
Yeah, I'll answer the first one. What are the fees included? Well, there's no hidden fees at all. They're all pretty transparent. The only fee your client's going to pay, and it's not a fee, it's a trust fee, I guess you could call it. But there's a $13.50 annual trust fee that's part of the annual premium. It's very disclosed and open. And what that's doing is that $13.50 is front loading 15 years of trust administration. So it sits in an escrow account, and you divide that by 15 years. I think it's $450 a year, but it's a part of the client's 5 annual premiums. And then after that 15th year, the client can dissolve that trust and ultimately change ownership from the trust over to the insured, and they just dissolve it. And those fees are included in all of those transactions. So now, as regards to the life insurance fees, obviously those are pretty transparent inside of the IEL. If you ever want to have that fee and expense report, please ask us for it. We have no problem. It's just an Allianz or a National Life button. And trying to think of, and then we do not charge for this, it's a split on the app. So that's something that we didn't bring up. So NIW for the services of all of the loan administration, trust administration, annual servicing, we are on the app for 30%. So we only get paid by the insurance company like you do. We don't take additional fees from a consumer or you as the advisor. We purely are a servicing split on the application. Since the policies are in a master trust, and when you refinance these policies, does the insured benefit in any which way? We don't refinance the policies. Where are you talking about when we pay the loan back? I don't know. I don't understand that question, Scott.
My guess is he's asking if the interest rate changes, if there's a refinance.
Yeah, I mean,
is there a benefit?
If these are 1 year loans plus a spread. Our job is to go out and always be an advocate to the client. So if there's a better bank and there's a better spread or term on this kind of loan, we're moving, right? So that's what you're going to get with National or NIW is we're always going to make sure that we're getting the best spread in terms on any loan facilitation, being that they're 1 year, they're 5 year blocks, but they're 1 year loans. We can move a block of money to another bank that will offer a better rate. So that is something that we do not only on KaiZen, but we do that, Scott, on our traditional cases as well.
Yeah, and I can answer this next one. How do we, as agents, monitor the policy's progression? I will tell you, I've been working with NIW a long time, David and everybody on the thing. One of the things that I love about what they do is their annual servicing model. Their statements are first class. You saw a statement earlier in the presentation showed Grace's KaiZen. They're first class. They have all the information in. They're going back and they're calculating the collateral. They're calculating everything on that statement. Not only do you get that, you have access to all of the things that you normally would have. So to the access to their statements on the website and all those things that LSW and Allianz has, so you can monitor them as they go.
Can I say something pretty exciting, Scott? So
yep.
To tagline into this, and I didn't get to play the video, but starting next tranche, every single client that buys KaiZen is going to be given a servicing portal from now on. So no more emails, no more PDFs, which have worked in the past. We are now, when the second your client becomes a customer, they're going to get access to their own servicing portal where they'll get all of their servicing information, what their loan was, what the rate of return was, what your cash values, death benefit, and it will monitor this every single year to original plan. And you as the advisor will get a little button next to your clients in the client management to be able to go in there as well and check the performance of that plan, so that you can do those annual reviews together. So we're taking servicing to a whole nother level in regards to giving you and the client full autonomy on what's going on every year inside of iLia. And we're talking about long term putting in servicing even after the loan's paid back for distribution support. So, I mean, obviously this is something in the future, probably 10 years out, but we plan on taking this technology all the way to the client's life expectancy, Scott. So that's kind of our commitment there.
Yeah,
I got a couple.
So we got a couple more. We got term blending. That's based on age, sex, underwriting class, how big the loan is. Each policy is a little different.
Yeah.
And obviously the everything in the state of Nevada, because that's where the master trust is. So two other questions I have. That trust fee, that $13.50, is that every year or how often?
Just the first 5 years built into the 5 client premiums. So if the total premium, if the client wanted to commit to $50,000, right, $13.50 will come out of that $50,000. So what you basically have is $48,650 going into the policy, $13.50 going into the trust that sets it up. And then that $13.50 for 5 years goes in there with the client's premiums, and then that's it. All those trust fees stop. they're escrowed, and it covers the 15 years of trust administration.
Perfect. And then the final question comes from our president, chief CEO. She wants to know why just Allianz and LSW.
Well, we also work with Securian. We also work with Emeritus. And they're just not in iLia at the moment from a technology perspective. But why not everyone else, right? Why not Lincoln? Why not? And they're all good companies. So it's not about the company, but not all products are priced to fit the KaiZen model. So as Scott and his team will tell you, there is pricing that's built into every IUL in different areas. Sometimes it's front loaded. Sometimes it's somewhere on the tail end. So what we had defined as a product that did a couple things: option A to option, or option B to option A. So we had to have an increasing death benefit option. We needed to have term blend options. We needed to have an early liquidity option, so a waiver of surrender. We had to have certain product functionality, right, to be able to price this to loan exit in year 15. So it doesn't mean that those products are bad. They just, here's one more little nugget. When we designed it at its most efficient we could, not every policy passes a stress test. So there are some times where there's costs inside of these IULs in various years that wouldn't allow us to pass a Great Depression and a high interest rate of the 1980s. Does it make it bad? No, just doesn't make it right for the KaiZen program. So it has to pass a stress test or we can't put it on the platform. That's a great question.
Yeah, great question, great answer. I have one final question, and this is actually from one of our guys that's actually done a number of these. So one of the common questions that he gets from a client as the policy matures, is it okay? It was okay illustrated to pay X annually at age 65. Now, years 1, 2, and 3, et cetera. What does it look like with the current actuals? The annual statement doesn't show that amount. Why not?
Oh God, that's a carrier enforced debacle. And we've got Scott, you and I would love to be able to run what's it look like in year 2, and those are basically enforces, right?
Yeah.
The problem with enforce illustrations is depending on when you're running them. Gosh, if you were running an enforce illustration on a policy that was ran 10 years where cap rates were 16%, right? And then you were doing it now, you're stuck running enforces with current caps and pars. So it's very difficult to really project out in a decreasing interest rate environment from a cap perspective. Now, as they go back up, it wouldn't be that big of a deal. So, but there's a lot involved in running enforce illustrations. As a matter of fact, Scott, I don't know how long it's taking your team, but it could take 5 to 10 business days to get an enforce ledger nowadays. Some of the software lets you do it now, but it's a very manual consuming process for not only the IMO, but the carrier as well.
Yeah, it's getting better.
It is getting better.
And don't forget, we're constrained even inside of enforce illustration. We're restrained by AG 49 as well.
Right.
So we're kind of at the mercy of the enforce illustration. So when NIW gets their statements, they do their best job of presenting the current loan rate, the credits, and they put as much information as they can.
But what we're going to do on the new servicing plan, whoever asked that question, it was a great question. We will say, where did you bought your policy here, right? Here's where your cash value and death benefit is year 2 compared to when you bought it. Here's where it's at compared to year 3 compared to where you bought it. So we will be comparing cash values and death benefits. What's difficult is projecting the distribution later, but we are going to keep track of growth and performance.
That's fantastic. All right, so we're definitely 15 minutes past our time.
Great question, Scott. This is good.
I love it. One of my favorite things is when we do presentations that our agents are interactive and they're asking questions, because that means the content is good. This is, for me, one of the most important things that we can be looking at right now. The market's a little squirrely right now, and that's a highly technical term. The market's squirrely. Our clients are looking for things that are safer, that are more consistent, especially our, that mass affluent group. They need places to put their money that they're going to be very that they can have some level of confidence that's going to be
Mhm.
there. And I just think that that's an underserved marketplace. And this is with everything that's with this, with the product, the process, the ease of doing business. I just think it's a great tool. So if you're not using it, please send me an email, get signed up, get the preferred agreement, and get rolling with this right away. And if you are using it, I know there's a couple of my team members here that are on it that don't have iLia, but that sell Kaizen. Do the same thing. Send me an email, and we'll get you going on the preferred side. So with that, if you have any questions, please feel free to call me. It's 310-477-7500. My email's sitting right on the screen there. It's swhitehead@totalfinancial.com. I want to say thank you to Travis. This was a great presentation. And to all of my agent partners that were on with us, thank you much for joining us for the last hour and 15 minutes. And we will talk to everyone shortly.
Sounds good. Thank you, guys. Thank you, everyone.
Thanks, Travis.
Alrighty, bye.
And bye.